Today, we are talking about a topic that is important to many, and that is seeing a better Earth, a cleaner Earth at that. And it's also a game of following the money. We know governments and companies and people are investing so much into bettering the way that we use energy on this Earth. And that's why we're going to be figuring out the best ETFs that trade on the Toronto Stock Exchange that have clean energy companies. But if this is your first time here, my name's Nick and welcome to Ways to Wealth. There is no doubt that many Western societies have devoted a lot of cash to figure out ways that we can better produce energy that won't be so harmful to the environment. But what we will discuss very briefly here is just the amount of liquidity, the amount of money that is being invested in these projects and initiatives. And we can see here on the US side that they plan to invest about $2 trillion annually by 2030. So by that point, $2 trillion annually every single year will be invested in the clean energy sector. When we focus and hone in on the Canadian side, we can see here that we are also investing, maybe not to that magnitude because we don't have as many people, but definitely still a lot to be considered. So we have a news article here from 2022 that the Canadian government invested $300 million in clean energy projects. We also have $3 million here later on that year in renewable energy capacity building program. And then we also have in 2021, the Canadian government investing in renewable energy of a sum of $960 million. They are also projected to continue to invest, especially when you look at the Liberal government's plan there. So with that being said, let's take a look at some ways that we can add this into our portfolio to take advantage of some of the investments and also feel good about our portfolio. And the first way to do this is a harvest product, HCLN.TO. We'll get a little bit of a similar pattern with the tickers in a little bit, but the first one, we can see the stock price is $11.61. It does have an annual dividend that pays about 1%, but that is not going to be the focus for all of these ETFs. They're definitely using that cash and reinvesting in the business rather than paying shareholders, and they all have relatively similar expense ratios. So let's dive deeper into the actual ETF to get a better understanding of what's going on. When we take a look at the sector allocation, we can get a better understanding of where they're investing. The first one, renewable power generation, that makes up over half of the ETF. Solar equipment, battery and energy storage, wind equipment, biofuels, etc. This is what this ETF is comprised of, and it spans across the world. So when we take a look at the holdings, we can get a better indication of some of the companies that they're invested in and also draw some similarities with the other ETFs that we'll see in just a short bit of time. But it is important to note the countries are spanning throughout the world. We see Germany, US, Canada, Austria, etc. This ETF is looking for companies around the world that are investing in the clean energy sectors. The next one is a BMO product, ZCLN. You get the drift of that kind of pattern that I talked about before. We could only guess what the next one is going to be. And this one trades for just shy of $20 on the Toronto Stock Exchange. Also pays about 1% in dividend yield, but again, not a dividend play whatsoever. And when we pull back the layers of the onion, let's take a look at what some of the holdings are in this ETF. In this ETF, we also see a large percentage of solar. We have a solar company here, Solar Edge. We also have First Solar. That's making up alone just 16+% of the portfolio. And what we can notice as well is that this is a world encompassing ETF as well. We have US companies, we have Denmark, we have Euro, we have China as well. So this is also playing the world in regards to companies that are investing in the energy sector. So this is definitely one to keep on the radar as well. But let's take a look at the third and final one. And obviously, again, following the same trend, it's an iShares product, XCLN.TO. And this one is trading for about $41 on the Toronto Stock Exchange. Dividend yield, not as high, but again, not dividend plays. So let's pull back the layers of the onion here to get a better understanding of what is being held in this particular ETF. And what we can see is some similar names that we just saw on the BMO product, Solar Edge, for solar, Enphase. These are definitely products that are going to be relatively similar. So this is something to take into consideration when you look at what is being held in here. And we definitely see some of that diversity in regards to global exposure that we've seen in the past. And, you know, it's kind of a crapshoot when you want to take a look at that. We can take a look at the past performance, throwing all of these into Yahoo Finance to see how they've performed. And year to date, they're definitely all in the negatives. It definitely seems that with higher interest rates, people aren't so focused in the clean energy area, but we know that money is being invested rapidly into this sector, and we could expect this to appreciate. But definitely note that this is one of the riskier investments and definitely should have a longer framework in mind. You should be holding this for 5, 10, 15 years, because we're not going to buy this today and expect it to be 20% gain in a short run. So keep that in mind when you're looking to add these into your portfolio. Definitely higher on the risk threshold, but we'll take a look at the past year just to see how they perform. Green is the iShares product, purple is BMO, and blue is the Harvest product. And it seems like the iShares and the BMO product, because they have the similar size holdings, they're the ones that are doing relatively better. We can also take this back as far as 2 years. It is important to note that past performance is not an indication of what future performance is going to be, but it seems like the iShares and the BMO are the ones that are standing out. Personally, I don't hold these, but I would definitely look to either the BMO or the iShares myself personally. And if you found this video interesting, I have a few others that you may like as well. So make sure to check out some of these videos here that cover some of the top stocks on the Toronto Stock Exchange. I hope you all have a great week in the markets. Happy investing.